Welcome back. Okay, so they hiked interest rates to try push down demand, and in return, those who sell us goods and services are going to have to respond to that lower demand and lower prices. Is that right, Sizwe?
That's correct.
Okay, so that's sort of something nicely. Now, the other thing is risks to growth, and I quote, moderately on the downside. Somehow, I think that moderately was thrown in there to make us feel calmer.
To make us feel calmer, that assumes we're calm already. I don't think so. I find myself in a state of huge nervous tension. I think that it's an acknowledgement of the status quo. That is that he was quite clear that the risk to growth is on the downside, and if they're saying that's a risk, you can be sure they look at it as a close to a reality. And what we have to look at, what we have to be aware of, are they perhaps projecting this a little bit further and saying even perhaps we have the risk of a stagnant economy, plus now the outlook for relatively high inflation. Stagflation is the worst of everything. And that is a position where we all just grind to a fault. You have job destruction instead of creation. We have very little, if any, new fixed investment. And it takes a long time to pull ourselves out of that. We would need a strong world growth, which we don't see on the horizon at the moment. So I think he's preparing us for that. And why not a higher rate of increase? Well, there's enough damage done already. If you think that 0.25% has an effect of, say, 10%, on the actual cost of borrowing, the cost of additional funding that's required, this is quite a big increase.
Is it fair to say that perhaps Eskom has put us in this position? And, well, despite world circumstances, if we didn't have the electricity crisis, the huge input costs from that, we wouldn't be facing the same dilemma.
On some level, I would agree. I just think it's difficult to just point it at one ill-disciplined increase in input costs. I think there's just a malaise of ill-discipline when in terms of cost behavior in the products and services markets in South Africa.
Is that a problem of policy or response to policy? Where does that come from?
I just think the economy is uncompetitive, and we are being found out at present. So Eskom is just one symptom of, if you look at what's happened to increases in water and sanitation fees, for example, those were also up, I think, more than double the upper end of the
but we don't speak about it because we don't see the lights go.
That's right.
Exactly. So there's just this massive increase in input costs in South Africa, and what that does is that it increases the headline CPI, despite there not being much demand pull inflation in South Africa. And if you don't do anything about that, it has a negative impact on inflation expectations. It incentivizes business to pass these costs on to consumers, and it can lead us onto a very vicious inflationary spiral. And so the SARB has to lean against that. And the only tool they have
is that rate hike. But now, is 0.25 enough? Is it going to actually put the brakes on it?
It's probably, this borrowing, certainly consumer borrowing, is at such a low level, it won't make much difference anyway. There has been a slightly higher growth rate in business borrowing, so it may have a small impact. But you said, look at this, why are these increases of administered prices going up at such a rate? It's a South African malaise. Just look at labour. They get awarded a well above inflation increase, and there seems to be no agreement that wage increases should be tied to productivity. So the cost of production, that input price, as Sizwe was talking about, is going up. But our competitiveness doesn't improve at all. And I think that this is the problem. And that's not just the workers at shop floor level. That's management too. They haven't taken this into consideration, what this bad planning, bad management has done to the state of the economy. There's a direct line there.
What role does fiscal policy play in this?
Fiscal policy and monetary policy are going hand in hand at the moment, so they are complementing each other. I think if you take a step back and actually think about what's really happening here, what's the fundamental problem is that we are a commodity exporting country, just like Brazil, just like Russia, just like a lot of other EM countries. We're suffering from the same problem. So we had a commodity boom, we got a lot of income, we spent it, and we started living beyond our means. So you have X amount of revenue and your expenditure increases significantly above that revenue for various reasons. All of a sudden, China slows, commodity prices tank, and as a commodity exporter, we are no longer getting that inflow that we used to get, and now we are left with this large current account deficit and these large budget deficits. So now fiscal policy must tighten. What's government doing? They're pulling the handbrake on expenditure and they're raising taxes. And what's monetary policy doing? It's tightening. What does that do? It reduces domestic expenditure so that we start to head towards living within our means rather than beyond our means.
I guess that's why we didn't get a 0.5% increase.
Yes, oh, absolutely. And this also says why they are being so conservative in their growth outlooks. Don't forget, he was talking about the possibility of lower than their previous forecast. He mentioned that they'd been forecast as low as 1.5%, and I think that is a good target now, or a likely target, with risk to further downside than that. Just look at the state of the commodities market. As we said, what we export, we find that some metals have come down to a third of what they were just 3 or 4 years ago. Well, clearly, the mining sector is getting devastated.
But now here's a rub. I'm sorry, let me interrupt you there. When we look at the biggest companies in the country, mining and what it contributes is no longer what it used to be. And we are more services or industrial oriented now as an economy. So why these commodities continue to be such a burden on us?
Well, there's a very simple reason, is that you might say mining is less than 10% of GDP, and you say manufacturing is 15% of GDP, and services are bulk of the economy, but that mining is the catalyst through it all, of it all. So, for example, manufacturing, a lot of SA manufacturing is actually part of the mining supply chain.
That's why so many mining CEOs say very smugly, without this, there would be no economy.
And if I may say, remember that mining is over 50% of our exports. So there you have a problem with the difficult balancing act.
Okay, now we have to wrap it. So do you think it will work, what Lesetja and the MPC are trying to achieve? Yes or no?
Yes.
Yes, we are in a hiking cycle and there's more to come.
Yes.
But not a lot.
Agreed.
Okay, all right. With that, we have to wrap it. Now you understand why you're going to pay the bank more. It's all for the greater good of the economy. Bye-bye.